morning. Happy Tuesday. It is another week and we are halfway through October. So, uh, just jumping on quick today and thought I'd kind of talk about some of the chart of accounts and why they are so important to your business, especially to help you run your business profitably and kick some butt. So, chart of accounts is basically your accounting file cabinet. You've got different drawers. So your drawers are your assets, your liabilities, your equity, your revenue, and your expenses. The revenue, that's pretty cut and dried. That's your income. Your expenses, again, pretty much everything you spend money on, except for those liability payments. So if you have a credit card that you're making payments on, if you have a vehicle loan, a real estate loan, anything like that where you have payments in place over a period of time that belong to an asset you have bought, those are liabilities. So the liability payments will not show up on your profit and loss, they show up on your balance sheet along with your assets and your equity. Your revenue and expenses show up on your profit and loss. So that's why that file cabinet is so important, that if your vehicle loan gets put in as an expense, it's going to come out of the wrong file cabinet, out of the wrong folder. It's going to go on the wrong report, and it's just going to make a mess. So, uh, assets, those are anything that you own that adds value to your company. So, property, vehicles, tools, trailers, uh, office furniture, computers, things like that. And then the equity is the value in the business. So you have, depending on what type of company you have owners' draws, specifically in sole proprietor or one person owned LLCs, where that's the money you're taking out of the business. You have the investments of the money you put into the business, and then you have the retained earnings section, or though if it's a single LLC or a partnership, it's not called retained earnings, it's just called owner's equity or the partner's equity. And that is how much value is in the business. So each of those categories are very important. You want to make sure that the chart of accounts is set up properly. Uh, one thing that can happen is if you have multiple streams of income on your revenues, maybe you want to separate them out instead of just sales. Separate out the types of sales. So if you have a book, if you have a teaching program, if you have services like remodeling or roofing, things that you want to keep separate. Obviously, I would assume one company would have all those. But if you want to keep each one separate to see how each part of your business is growing, developing, and profitable, you'd want to set up your revenue in have different folders in that revenue cabinet to track those different streams of income. And the same thing with each of those drawers in your file cabinet. Your assets, you don't want to just have one thing said assets. You want to track your vehicles, you want to track your tools, things that go in a different folder all separately. And if you have a loan tied to it, you definitely want that one separate, because then you're going to have the loan information in there as the loan gets paid off, your depreciation of how much the value you have left in that asset. So I know that was kind of a wide coverage of what accounts chart of accounts is. But the simple answer is it's a large filing cabinet for your business for how it runs. And if you have any questions about how to set yours up better or how to tweak it if you've already up and running, just so that you can get some better answers of what you're spending, what you're making, especially if you have multiple streams of income in your business, reach out, set up a time to chat, and let's just go over and brainstorm some things for you to see how we can set that up so that you can look at those reports, because it all ties back to your financial reports, in a way that makes sense to you and helps you grow. So enjoy the rest of your week, and I will see you next Tuesday.